This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Charlie Hardage. He's co-founder of Passive Profits in January 2023, co-founder of H&K Investments in 2019. They're at 1,064 units. Background in IT sales. He's also a veteran as well. I love promoting our veterans. So grateful for his service. Charlie's going to dive in today where he learned that this passive investing syndication stuff may not actually be a scam. But he took advantage of that and dove in. You're going to hear that LP to GP story of him taking numerous leaps, right? Being an LP, but then also eventually becoming an operator himself, and some of the lessons learned. Charlie, welcome to the show. Looking forward to the conversation and us diving in on a number of things here. But before we do, and how did you get into this syndication business and commercial real estate or even investing? What does that look like?
Man, a lot of different parts to this story. And Whitney, thanks for having me. I love sharing my story. Love being able to talk about real estate. Huge passion for me. When I was like 10 or 11, I had a buddy, my best friend's dad was an entrepreneur. And that was at the time when I didn't know anything about that. I was taught to go to school, get good grades, good job, and climb the corporate ladder. And so when he was always around, he wasn't traveling for work. He made his own schedule. It's like, man, that's really cool. But that's not me. That's for someone else, right? And but it got me thinking, got me just, I wonder what else is out there. Fast forward, went to college and in college had a really good buddy and now my brother-in-law and business partner. His family had some real estate. It was before Airbnb was around, but they had a vacation property. And so he was telling me about that. I'm like, oh man, that's awesome. But I could never do that because it's just too expensive. Fast forward a few years, I was on my second deployment. I was in Afghanistan. I read a book probably no one's ever heard of called Rich Dad, Poor Dad. And, that totally just changed my mindset and started this fire I didn't know I had in me. And, a few years later, I heard about multifamily syndication, but no one I knew about was doing it. I honestly thought it was a scam. How can you passively invest in real estate? Like, that's just not a thing. The only passive investments that I knew about that everyone else knew about was 401ks, IRAs, and the stock market. And that was it. So, after several years, Whitney, I was reading more books because Rich Dad, Poor Dad got me into books and real estate books, started educating myself. And a few years ago, I started, diving back into the syndication space. And I was like, holy cow, this is absolutely amazing. I love that I can invest passively. Love that I can grow wealth and I don't have to, at the time, I didn't know anything about the multifamily syndication space. So it's great that I could put my money in with experts and they do the hard work and we all win, right? We all get the benefits of their hard work.
So were you able to, say, invest passively in any deals before actually becoming an operator yourself?
Yep. So I invested passively in 2 deals. And, like I said, Whitney, the first time I heard about it, about syndications and being an LP, I knew it was a scam. I was like, I get it from the active side. Like, that's not a scam, but the passive side, that's a total scam. But then when I educated myself and learned as much as I could about it, I realized, okay, there's actually something to it. I've just never heard about it from anyone else before. And so I invested into a deal, literally like a day or two later, that same team had another deal come out because they had put 2 LOIs out. They won one and they were second place on the other one. On the second one that they were second place, the initial buyers backed out. And so the broker went back to them and said, hey, congrats, you won this deal if you still want it. And they're like, we do. But they weren't ready for 2 big raises. But man, as soon as I got home from that bank wiring the first money, I was just over the moon. I was like, this is amazing. I felt like my financial freedom clock just started ticking down from that moment. The email went out with that second property. I invested in that within only a few days. And I was like, I just felt this huge relief this monkey off my back, because I was trying to figure out, what do I do with my life? What do I do? I don't want to work for someone forever. I want to take control of my retirement. And so the fact that I was able to get into 2 deals within a few days was just mind blowing for someone like me that didn't grow up with any money and didn't grow up with anyone that had money.
Yeah, no, that's incredible. Tell me, what was your, first, how did you pick this operator? You didn't know about this space. Why this operator?
It's funny because it's actually a family member. He had introduced me into syndication, 6, 7, 8 years prior. But again, Whitney, like no one I knew was doing this. No one on Facebook, LinkedIn, had never seen any books about this. And I just, my sphere of influence, no one had heard about it. So anytime I talk to someone about it, they're like, yeah, it sounds too good to be true. But I knew their track record. I knew his team. I knew they had invested in over 100 deals. Dozens had gone full cycle. They had over $3 billion worth of assets. And so, their average annual return was much higher than what they had, projected, just due to conservative underwriting. So when I finally educated myself, and, a big piece of that besides the education was actually my mindset. When I uncovered that, unraveled that onion and all those different layers, I was like, man, this is exactly what I want to do in my life. And, at the time it was just passive. I didn't even really think, hey, I can do this actively. But again, more education, more mindset shifts. And
how long ago was that?
That would have been about 3 years ago or so that I got into the 2 LP deals.
Okay, nice.
Yeah.
And has that been as you thought it was going to be?
Yeah, it's been better. And, even with the market and where the interest rates are, the deals that we're in, I didn't expect them to double my money in 8 months, right? I mean, that would have been phenomenal, but I knew as a 5-year hold, 5-year underwriting, 5-year projections. And if they sold the property sooner, awesome. But I knew that it was not a get rich quick, scheme. It was truly, if done properly, if they executed the business plan as they said they would, and as they have on dozens of other deals, I knew that within 5 years, I'd be able to, approximately double my initial investments.
Yeah. What about, speak to your, I know it's changed a lot in the last 3 years, but, speak to, maybe how you underwrote that deal at all, if you did then at all. I think mostly it was probably relationship, right? But maybe how you did it then, and then let's dive into how you would do it now based on what you know.
Yeah, then and now is completely different. However, I underwrote it a little bit, so I love to underwrite. I'm analytical. I'm strategic, or at least I think I'm strategic. And I was able to. In my previous life, I was a sales manager. Had to do reports and knew Excel pretty well. I'm no data analyst by any means, but I know enough to be dangerous with a spreadsheet. So I was able to plug some numbers in. I knew the market as well. My sister lived there for a little bit. I knew the massive growth in that area. So I was able to just, I knew it was a great market to begin with. I plugged in a lot of the numbers, just projected rent growth. I knew the market a little bit. That's then. Now you look at my underwriting a few years ago, it's terrible compared to what it is now.
Sure.
I think nowadays, Whitney, what I would look at more as well is, what's the loss to lease? It's not just physical vacancy, it's economic vacancy. What are the concessions? Over the last 12 months, we probably had a lot more concessions than we would have had over the last several years, just because where we are with interest rates and occupancy. But I would make sure to capture the economical vacancy besides just physical vacancy, because I was not capturing the loss to lease or concessions before, was not capturing the fact that it may take 2 to 4 weeks to renovate a unit. I was just saying, yeah, it'll take a weekend to turn the unit. So I'm a lot more cognizant now of the actual, where's the property losing money, and things that you normally wouldn't think about. Little things like the loss to lease, like I've mentioned, and concessions. So
any other questions that you know of now that you wish you had known then to maybe ask the operator?
I didn't realize about a lot of people, and we do this now in our active deals when I'm an operator. But we analyze the median household income, and then also the median home sales prices in that submarket or market, because we want to know, why are people moving here versus a home? Maybe it's really good schools, maybe it's not great schools. Another thing that I look at now is how big are these units, or how small are the units? Because if they're smaller units, maybe schools aren't as big of a deal because less families would be living in there. But sometimes there's bigger units, even 3-bedroom, 4-bedroom, or even the 2 bedrooms have more square footage. And so I like to look at that as well. I have a daughter, a school-age daughter, and so that's really important to me now. And several years ago, didn't even think about that, right? So love just looking at the numbers, diving into the school system, and different things like that, where it's not just the apartment community and the comps, it's also what's around the market, the submarket.
Why become an operator? Why not just continue investing passively?
I didn't hate my W-2, but I didn't love it. And I've for years, for probably a decade now, I've been very passionate about real estate. Just took me forever to find my niche. I had looked into flipping homes or just the BRRRR method or single family, and those seemed okay, but not great. And when I changed my mindset and realized, hey, I can passively invest in multifamily, and then realizing I can actively invest in multifamily, that's really what did it for me. Because I'm looking out 30 years from now, Whitney. If I want to be a full-time operator, I can. If I want to only passively invest, I can. And that's not really true about other niches. I can't passively flip homes, single-family homes, unless I have a partner or I'm a private lender. But then I'm kind of diverting my focus between maybe flipping homes, knowing the market a little bit, or trying to learn how to be a private lender, or looking at other niches. And so I said, look, I can understand multifamily syndication, understand the multifamily asset space, and I could passively invest or actively invest.
Yeah, no, it's great to have options, right?
Yeah, for sure.
Yeah, no doubt about it. And so, what's been maybe a challenge going from, say, just LP thinking, right? I'm just going to be a passive investor, to actually becoming an operator?
For me, it's raising capital. I didn't grow up with money. I didn't grow up with just going to a country club or things like that. And that's my mindset of where the money is, right? Doesn't mean that that's only where it is, but I was told for a while that, and this is years ago, if you find a good deal, the money will be there. And sometimes I talk to people and they're like, yeah, that's true. I'm like, well, great. Where's the capital come from? So for me, it's really, I was in the military for 5 years or so, and I just didn't ever want a personal brand. I wanted to, kind of be, I didn't want to be in the limelight, wanted to be quiet, wanted to have my own space, my own freedom, didn't want to be too public. And so now I'm realizing that all those years that I've been on Facebook or LinkedIn, I've never talked about real estate and how profound, how much of an impact that can have, that it had on me, number one, but then how much of an impact it can have on other people. And so that's really over the last year or so, Whitney, I've been more active on social media and just trying to get the word out about how profound passively investing in real estate and multifamily syndication can be. So I think the hardest part for me over the last couple of years being active is really just raising capital.
How have you overcome that? What are a couple of things you've done to be able to step into that space and be able to raise some capital?
Yeah. Number one is just getting the word out and talking about what I do. So posting on social media, I've friends and family I've known forever that didn't know what I was really doing. And they knew I was in real estate, but that was kind of it. They didn't know I was doing apartments. Maybe they thought I was flipping homes or doing Airbnb. They had no idea, which is a huge miss on my part. And so I'm when I take action, I am taking action that is, I'm thinking about it, right? I'm not just saying, oh, I love real estate, I'm making money in real estate, or you can make money in real estate. I'm talking about how we're making money, how we're helping other people make money in real estate through apartment syndication. How you don't, LPs don't have to be experts. They don't have to have the knowledge. That's what our team is for. And so that's helped. I came out with a podcast a few months ago as well that, still new, but that's helping get the word out about being able to passively invest in real estate. So it's really just, we have a small shop. It's myself and my business partner, and we're just trying to get the word out any chance we can about passively investing in real estate.
Charlie, I ask everyone what they predict for the future, right? 6, 12, 18 months. Nobody knows for sure. I don't care who they are. However, what we believe is going to happen affects what we're doing, right? So what do you think is going to happen over the next, in the future, the short term?
Great question, Whitney. We've already, so with interest rates where they skyrocketed over a few months, that was about 18 months ago. I do think interest rates are going to peak towards the end of this year. I think they're going to drop or start dropping Q1 of next year, and in about 12 to 15 months they'll continue going down. That being said, I also think that the deal flow has been a lot lower. I'm based in Nashville. I primarily look in Nashville. Last year we were putting offers on 1 or 2 properties a month, and now it's like 2 a year basically. So far this year, because deal flow has been down. I think we're going to start seeing deal flow pick up a little bit more. I think there's a lot of operators that bought properties, with bridge debt handing out money basically with the floating interest rates. A lot of the rate caps are expiring, and so current operators are going to have to either buy new rate caps, which depending on the price of the property and what that rate cap looks like, it's probably 10x what they bought, only 2 years ago. Or they're going to look at refinancing, which I don't know how many of those would refinance, especially if they were able to get 75 to 80% leverage. And interest rates are so much higher now. I don't know if they're really going to be able to refinance unless they have either done a phenomenal job, bought extremely well, or they're putting a lot of cash into it. Or I do think what's most likely to happen is a lot of people are going to sell in the next 9 to 12 months and not necessarily hit those projections, but they're not going to be foreclosed on and be forced to sell. So I do think in the next 9 months or so, we're going to see interest rates going down slightly. I think we're going to see more deals out there, and I think we're going to see people selling because they don't want to put a ton of money into a rate cap or do a capital call or things like that.
What's a way, Charlie, you've recently improved your business that we could apply to ours?
Ooh, phenomenal question, Whitney. I wrote about 40 articles on our website. I have, and that starts at why I like real estate just in general. Talks about, stocks versus real estate, single family versus multifamily, goes through our underwriting process of multifamily, what markets or what we look for in markets, investor returns. And it's kind of like a customer journey is what I call it. And I've automated that. So now when you get added to our email campaign, it's a kind of a slow drip over like 8 months that my investors are now understanding. They go from knowing very little about what I do to the end of 8 months, knowing what we do, how we do it. There's a case study in there. And it's just a slow drip. And, part of the reason that it's a slow drip is because right now there's not a ton of deals out there. And so I don't want to say, hey, something's coming. And, several months down the road, that's when we get our next deal. So I think with interest rates being so high over the last 15 months or so, Whitney, I've been able to go back to the drawing board and build this evergreen marketing campaign, this drip campaign that will last for years and years. That just helps my investors, my limited partners, understand more about real estate and what we do.
What's your best source for meeting new investors right now?
LinkedIn's actually been great. Posting about real estate, passive investing. Going back to what I said towards the beginning of the conversation, Whitney, I thought this was a scam because, multifamily syndication as a passive investor was a scam. I think a lot of people, maybe they don't see it as a scam, but they just never heard about it before. And so, there's been people, there was a guy that I had met through a company that I worked at. He was interested in the product we were selling. Several months ago, he reached out. He's like, okay, I've seen your post. What do you do? And so even though he never bought that SaaS product from me and from our company, we were able to have a conversation. He was like, I'm tired. I don't want to work at my job forever. So I want to see what else is out there. So it's really just educating people on social media. And I found LinkedIn is a really, really good place to do that.
Nice. And what about your best advice for passive investors right now?
Educate yourself. And that was something that I didn't do well. I was not educating myself. I was educating myself, but I wasn't focused. I'll say that. So if you want to get into multifamily, great. Educate yourself on that. If you don't know what you want to do yet, figure out what your goals are, because one of the reasons and the biggest reason I'm in multifamily is because, like I said earlier, Whitney, I could do it passively or I could do it actively. So figure out your goals. When you figure out your goals, educate yourself on how to get there. Multifamily syndication is, in my opinion, the absolute best way to reach financial freedom and time freedom.
What's the most important metrics that you track? Could be personally or professionally.
Great. I probably should track more metrics personally. Right now, what I'm looking at is two things. How many deals are we underwriting and putting an offer on? And that just helps me kind of figure out where we're at. And then a metric that is kind of along that same lines of how many investors do we need to talk to, because then I know how many investors will invest in our deals. So always looking at growing our investor database. How many deals are we underwriting every month, and how many deals are we putting offers on every month?
What about some habits that you're disciplined about?
Being laser focused, being productive. I was very focused before, but I wasn't laser focused. And so when I was focused on 20 different things, it meant in my mind that I was focused on 0 things. So I try to read or listen to audiobooks all the time or podcasts all the time just to learn. But I'm focused now on what am I going after? I don't want to listen to a podcast just because it's real estate related. That was my problem before. Now I'm focused on multifamily. I'm focused on market podcast and books and news articles, things like that. So I get laser focused, and that's really helped me become so much more productive.
Any way you track that, or how do you know what you're going to laser focus on today?
I have a to-do list that's not anything fancy. It's a piece of paper. Sometimes it's a Post-it note. Have a bunch of Post-it notes just always right in front of me within arm's reach. And I got a bunch on my monitor and a bunch on my desk. And that really just, it's nothing fancy. It's not digital, but I like putting it right there, because then when I'm done with it, I can crumple it up. And so I don't really have a way to track it except for the fact of there's, fewer Post-it notes on my desk than this morning. And to me, that's a big win.
Yeah, for sure. Charlie, how do you like to give back?
Man, Whitney, I love talking about syndication, both from an active side and a passive side. I love sharing my story about the passive side and how much of an impact this had on me and my family and our financial future. I love that. But then also, if you're a newer, want to be a new operator, want to get into the active side, I love talking about that. I love talking about how I could have been better because I didn't focus on capital. I wasn't on social media, or I wasn't active on social media. So I love just kind of sharing, the issues that I have and I had, how I am either overcoming those or how I've overcome them. I love just shortening that timeline for new investors or for LPs that want to build a future for themselves.
Charlie, grateful to have met you and had you on the show. I'm also grateful for the way you gave back just in your service and your military service as well. So thank you for that. Always grateful for our veterans. And so thank you again. But tell the listeners how they can get in touch with you and learn more about you.
Yeah. Best way to reach out to me is our website, hkigllc.com. I'm on LinkedIn. I'm on Facebook, Charles Hardage. There's not many of us, uncommon name. And then have a podcast called Passive Investors Playbook. So yeah, best way is our website.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.